Silver just opened Monday morning at $84. And 48 hours from right now, the Federal Reserve will make the single most important decision for the silver market in all of 2026. Wednesday, March 18th at 2 p.m. Eastern Time. That is when everything changes. And whether silver is sitting at $74 or $94 by Friday depends entirely on what one man says at a press conference on Wednesday afternoon. Today, I'm going to give you the complete Monday setup, where silver stands right now, what the Fed is going to decide, what the press conference will reveal, and exactly what you need to watch over the next 48 hours to know which direction silver breaks. Let us start with the Monday open. Silver opened this week at 84.44. Gold is sitting at 5,171. That gives us a gold to silver ratio of 61.3 to 1. The dollar index is firm near 99, and the market is doing what it always does in the 48 hours before a major Fed meeting. Nothing. It is holding its breath, waiting. Because every experienced trader knows that making big directional bets before a Fed decision is one of the most dangerous things you can do in commodity markets. But here is what makes this particular Monday different from every other pre-Fed Monday this year. Silver is sitting on a knife edge, literally. The $82 to $84 range is the exact zone of the 50-day exponential moving average. The single most important short-term technical level for silver right now. Above it, and the short-term trend is bullish. Below it, and the short-term bias, flips bearish. And silver has been dancing around this level for 2 full weeks without being able to make a decisive move in either direction. Wednesday's Fed decision is going to force that decision. The market cannot stay frozen forever. Now let us talk about what is actually going to happen on Wednesday. The Federal Open Market Committee will announce its decision at 2 p.m. Eastern. The policy decision will be announced alongside the summary of economic projections, the famous dot plot, and followed by a press conference that will provide further clarity on the central bank's policy outlook. Markets are expecting the Fed to hold rates steady at 3.5 to 3.75%. After 3 consecutive cuts in late 2025, the Fed has adopted a wait-and-see approach, and most analysts expect rates to remain in a holding pattern until the second half of 2026. So if everyone already knows the Fed is holding rates, why does this meeting matter so much for silver? Because it is not the rate decision that moves the market. It is the dot plot and the press conference that follow. And this March meeting is the first one since the chaos of January. The first one since silver crashed 31% in a single session. The first one since gold broke above $5,000 for the first time in history. The first one since the Iran war began reshaping global energy and commodity markets. This March meeting is a major event. It includes the dot plot summary of economic projections, and high volatility is expected. Here's the specific data that will drive the silver price reaction on Wednesday. The summary of economic projections, released in December 2025, signaled a hawkish outlook. The median projection suggested only one rate cut of 25 basis points for the entire year of 2026. This implied the Fed believed the economy would stabilize and inflation would remain the primary concern. But the March dot plot may tell a very different story. Here's why. Since that December meeting, 3 things have changed dramatically. First, the Iran war has pushed oil prices sharply higher, adding new inflationary pressure that the Fed did not anticipate. Second, consumer spending data and housing market figures have come in weaker than expected, suggesting the economy is softening faster than the Fed projected. Third, gold has broken above $5,100 now and $5,170, levels that signal deep institutional concern about the long-term purchasing power of the dollar. When gold is telling one story and the economic data is telling another, the Fed faces a genuine dilemma. Financial markets remain skeptical of the Fed's conservatism. With unemployment breaching 4.6% and revised data showing job losses, many analysts believe the Fed will be forced to cut rates more aggressively, potentially 3 to 4 times, to prevent a recession. If Wednesday's dot plot shifts even slightly in that direction, silver will move immediately and violently. The bull scenario for silver this week looks like this. The dot plot shows more Fed members penciling in 2 cuts for 2026 instead of 1. The press conference opens with language about softening growth rather than persistent inflation. Lowering interest rates increases the attractiveness of non-interest-bearing assets like silver, causing prices to rise. The dollar weakens. Silver breaks above $86 in the first hour after the announcement, then $89. Then it tests the critical resistance at $91 to $94 that has been capping every recovery since January. A clean break above $94 considered on Fed Day would be one of the most powerful technical signals in the silver market this year and would put $100 back firmly in play. The bear scenario looks like this. The dot plot is unchanged or more hawkish than December. The press conference emphasizes that Iran-driven energy inflation is more persistent than expected. An FOMC decision to raise interest rates or signal rate hikes typically results in a decline in silver prices as investors move toward interest-bearing assets. The dollar surges. Silver breaks below $82 on a daily close, then $80, then $74. And the algorithmic models that are already calling for $74.20 by March 21st start looking less like a warning and more like a roadmap. Here's exactly what to watch on Wednesday. First, at 2 p.m. Eastern, the moment the rate decision drops, watch silver's initial 5-minute reaction. Whichever direction it moves in the first 5 minutes is almost always the correct read of the market's interpretation. Second, count the dot plot projections. How many FOMC members are now projecting 0 cuts in 2026? How many are projecting 1 cut? How many are projecting 2 or more? If the number projecting 2 or more cuts increases from December, that is dovish for silver. Third, watch the Fed chair's opening statement at the press conference at 2:30 p.m. The first paragraph tells you everything. Inflation language first means hawkish. Growth concern language first means dovish. Fourth, watch what Shanghai does overnight on Wednesday into Thursday morning. If the Fed delivers even a hint of dovishness, Shanghai physical buyers will accelerate their accumulation. Analysts foresee continued upward momentum driven by anticipated global rate cuts, safe haven demand, and robust industrial requirements. A strong Shanghai overnight session after a dovish Fed would be one of the most bullish setups silver can have. Here is the bottom line for this Monday. Silver at $84 is not random. It is exactly where the market parks itself when it has no conviction about direction. The buyers and sellers are perfectly balanced. Nobody wants to commit until Wednesday. And that balance is about to be broken violently in one direction or the other. The upcoming FOMC meeting carries added significance as any decision on interest rates will be announced immediately after its conclusion. And for silver, sitting on the edge of its most critical technical level, the 48 hours between now and that 2 p.m. announcement on Wednesday are the most important 48 hours in the silver market since January 30th. Watch $84 today and tomorrow. Watch 2 p.m. Wednesday. And subscribe right now so you get the live breakdown the moment that announcement drops. Drop your prediction in the comments. Dovish Fed and silver breaks $94 by Friday. Or hawkish Fed and silver tests $74. I read every single one.